Hey everyone, welcome back to Corporate Decoder. Today we're diving into GrafTech International's recent report. And let me tell you, it's a bit like a roller coaster, but instead of thrills, we get financial spills. Buckle up because we're about to decode what's really going on behind the numbers. Today we are looking at an 8K filing. This type of form is used to inform investors of significant events that could affect the company. So let's see what happened on April 25, 2025. The main purpose of this filing is to announce GrafTech International's financial results for the first 3 months of 2025. So basically January, February, and March. Let's dig into the numbers to see how they perform. To get the full picture, let's check out the press release that's included as an exhibit. This will give us more detailed financial figures and management's take on the company's performance. Alright, let's crack open this press release and see what's cooking. Remember, press releases often highlight the good news, so we need to read between the lines to get a clear view. I'll scroll down to what I think most of you want to know. Here are some key numbers for the first quarter of 2025. We're looking at how much money GrafTech made and spent during those 3 months. First up, net sales. These came in at $74 to $3 million. That's less than half of the $100 and $9 million in the same period last year. So they are really hurting in sales. That could be due to a variety of reasons like lower demand or increased competition. The company is selling a lot less than they did last year. Next, let's look at the cost of sales. This is the amount of money GrafTech spent to produce what they sold. This number is $69.1 million. Last year it was at $111.6 million. Seems like they managed to reduce costs, but it's not enough to make up for the sales decline. Now, on to selling, general and administrative expenses. Think of this as the cost of running the business, like salaries and marketing. This quarter, it was $24.4 million. In the previous year, it was $22.40. Good drop in sales. That's not a good sign. It means they're spending more to achieve less. Add a good sign at what have achieved less. Traffic went up despite the drop in sales. That's not a good sign. It means they're spending more to achieve less. Finally, let's check the net loss. This is the bottom line. In this case, it's a loss of $34.4 million. Ouch, last year they actually had a net income, which means profit of $23.7 million. That's a big change from profit to loss. And it tells us that the company is struggling quite a bit. Let's see how the company is managing its money. Liquidity basically means how easily a company can pay its short-term debts. Capital resources refer to how they fund their operations and investments. GrafTech had $36.6 million in cash at the end of March 2025. At the end of 2024, it was $63.9 million. Their cash reserves took a big hit. This could limit their ability to invest in new projects or handle unexpected costs. For the 3 months ended March 31, 25, they used $26.7 million cash instead of generating it. They are spending more than they are $13.8 million. This means that their core business operations are burning cash instead of generating it. They are spending more than they are making. They spent $6.4 million on investing activities. This could include buying new equipment or facilities. Last year, they spent $4.2 million. Investing money can be good, but if the core business isn't making money, it might be hard to justify new investments. They had $0.5 million from financing activities. Last year, they spent $22.4 million. This suggests they're not borrowing much money right now, maybe because they don't want to increase debt, but it also means they have less cash to work with. Capital expenditures totaled $6.0 million. Last year, they spent $3.8 million. Again, they are still investing money into the company. Let's take a look at what the company expects for the rest of the year. This can give us an idea of whether they think things will get better or stay the same, or maybe even get worse. They plan to manage their production carefully to match demand. This suggests they don't expect a big increase in sales anytime soon. They are trying to not produce too much to avoid inventory building up. They expect capital expenditures to be between $30 million and $40 million, so they are still investing. GrafTech expects adjusted EBITDA to be between $60 million and $80 million. EBITDA basically shows how much profit they make from their core business operations before taking into account things like interest and taxes. The company is aiming for $80 million. The problem is that in 2024, it was $264 a million, so significantly lower. All right, we've looked at the key points from the filing. Now let's zoom out and put it all together. So what's the story here? GrafTech is facing some serious challenges. Sales are way down. They're losing money. Their cash reserves are shrinking. They're not making nearly as much as they were the year prior. They are spending more while earning less. While they are still making some investments, their financing activities are limited. They expect their profits to decline significantly. But it's not all doom and gloom. They are still investing in the company. They are managing their production to avoid oversupply. But overall, the trend is not looking great. Investors should keep a close eye on the company's next moves and whether they can turn things around. Now, my take on GrafTech, it is facing a tough market. The sharp drop in sales is a major red flag. While cost cutting is helping a bit, it's not enough to offset the sales decline. The loss of cash and reliance on financing activities mean they might struggle to fund their operations and investments. On the other hand, their continued investments and active management of production show they're trying to adapt. However, the expected profit decline suggests a tough road ahead. It looks like GrafTech needs to find ways to boost sales, control costs, and stabilize its finances to weather this storm. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Let me know in the comments what company you want me to decode next. See you in the next video.